All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Have you ever been to a basketball game, like a college basketball game, and it's middle of second half, and you're looking at which team's going to take momentum, and all of a sudden, one of the teams they go on this, they go and they hit this great shot, and it looks like they've got momentum, and they're just going to carry it out, and everything looks in their favor. The other team has to call a little bit of a timeout, and they go to commercial break, and then the game starts again, and the other team comes out and makes an incredible shot, and all of a sudden the momentum just absolutely switches and goes to the other side. And now it's okay, back and forth lead change, back and forth lead change, and each team making some really interesting shots, really interesting statements, and ultimately, it just keeps on going, right? It just keeps on going. And the only thing that ends it is the clock. Well, right now we're watching this market play a giant game of ping pong or basketball, going back and forth between the Bulls and the Bears, literally on a day by day basis right now. And I mentioned yesterday into the close that it was something where. Look, I liked some of the bullish or some of the bearish technical signals that came in, some of the bearish breakdowns that came in. But in a very similar way to Wednesday when we had some of the bullish technicals, can you really trust them in this market? And, you can see the market's set to gap up 30 points here today. So despite, some of those breakdowns that we saw yesterday that have a strong, negative connotation to them historically, and when you look at the odds, something else changed here today. What changed? Well, we had Chinese officials confirm that they are meeting with U.S. trade delegates on Monday and Tuesday. That's the news. That's the driver here. This isn't about jobs. You can see what jobs report has done. It's created a little bit of up and down here in S&P futures. But this rally, this rebound in S&P futures overnight is all about that meeting that will be happening on Monday and Tuesday. And the market knows. The market completely understands that if there's trade war resolution and positive trade war resolution, this is a really cheap market. It's a very inexpensive market. It's one where there is value all over the place. But at the same time, if there's not resolution and there's further economic contraction, this market has a ways to drop. It has a ways to drop, and so that trade element just becomes key. And in almost a very similar way to 2012, when we had the Greek Euro crisis, and Germany is basically saying we're not bailing them out again, and then the next day they changed their mind, and then the next day no, they're taking a hard stance, and then the next day maybe we'll step in, and the next day Greece concedes a little bit. The next day, Greece says, no, don't go away. We take that back, right? And you just get this absolute ping pong of a market. We're sitting in that right now. We're absolutely sitting in that right now. And, it is one where we are seeing the economic data slowing. We are seeing the earnings slowing around the world. We are seeing central banks with not a lot of ammo. Some of the U.S. central bank actions will be in focus here this morning as, Bernanke and, Bernanke, who was Fed chair, 2 terms ago, will be joining Janet Yellen, who was the last Fed chair, and they will be joining Powell, who is the current Fed chair, for a panel interview. So that'll be going on here today, and market will have their eyes on that. But in all, we have this ping pong, back on higher. From a trade standpoint, obviously yesterday, I already said yesterday, hey, I'm going to wait till this morning. Jobs Fridays notorious for reversals. If we gap up, I'll look to trade it down and vice versa. Well, we're gapping up, but there is a little bit of a news change. We're not gapping up because of jobs, right? This isn't a jobs issue. This isn't oh, hey, you know what? U.S. created jobs or didn't create jobs type of issue. This is a more substantial, more substantive issue here. So it's it's a gap up, but I will be looking at. But I think I have to look at it both ways, as potential up and potential down here, and something where, let's face it, is the market going to kind of give an all clear one way or the other today? Probably not. Not with now this next carrot out there till Monday or Tuesday. And, okay, what's going to happen? What's going to happen there? And is something positive or negative going to come out of that here overall? So from a just broader market standpoint, for the cost and the expense of the options and where it sits and where things are, man, it's a rough spot, and it's one where if we get some volume indication, throughout the day today, I'll look to play it. But outside of that, I'll be cautious there, from a market standpoint. Now, from an individual stock standpoint, I think there's some stories that, are very interesting here this morning. One is on Masco. Now, Masco is a company I've always followed. I don't trade it for the challenge much. The spreads aren't always that great. But here's Masco. This is basically a construction type company here in the U.S., cabinets and all sorts of stuff that they're involved in. But, this is one of those where the weekly chart, you can see the drop here. The drop here on earnings, MACD down here to -2, and then we get a retest of the lows with the MACD substantially higher. We have this really nice positive divergence here in the momentum oscillator, which is a quality seen in a lot of double bottoms. And, Masco's kind of bounced here with the market, traded with the market. But it's going to gap up here this morning as it caught an upgrade. And a very interesting upgrade, I would say, especially given the fundamentals of the company, which, when we talk about, there's actual value back in the market, you look at names like Masco, that's where you look and you say, okay, yeah, there's fundamentally, this is nowhere near what it was in the mid-40s, right? Now it's down below 30. It's not super cheap, but it is definitely not expensive anymore. But Bank of America came out and they upgraded this to buy from neutral and put a $36 price target on it, named it a top pick. Basically said, heavy exposure to the U.S. remodel activity and residential repair, which could become increasingly attractive in a period of cyclical concerns. And potential to unlock value through the sale of their underperforming cabinet and window business. So that's the upgrade here for Masco. I'll be looking at the gap up, seeing if I have a chance to play it here. I think it's set to gap up about 50 cents. This is a stock that could probably trade up $1.20 today with this upgrade, but I do think this upgrade's enough to catalyze it even further, given what's gone on, here with the company, with the space. Now, generally, when I look at Masco, I'm also going to be looking at Vulcan Materials, VMC, which is a little bit of a different type of business, but, essentially the same. You can see, it didn't come all the way down and retest the lows that it had here in October. Another one is Martin Marietta, MLM. Same chart here. Nice little positive MACD associated there with it. So we'll be looking at these for an entry here on the open. We don't have like heavy short exposure in any of these names. I believe Masco's like 3% or somewhere around there. So But we are dealing with names that have PE ratios that have fallen back to the 10-9 area, and are definitely a lot cheaper than they have been here for a while. Now, another interesting element going on this morning is the energy element. Now, we have seen oil rally, we've seen oil rise here off of its lows from last week, as production cuts in OPEC have started to take hold. And we've seen those start to take hold here this week, starting on Monday. And, we've seen oil pretty much track higher as the evidence has come that those production cuts are happening there in OPEC. So we are seeing that, come into play, helping to push oil on higher. We'll see energy outperform here this morning. Now, while energy is set to outperform this morning, we did have Merrill Lynch come out and downgrade a whole bunch of these energy names. Just kind of do some mass downgrades in a way that when we look for a bottom in a sector, you tend to see a couple analysts do this same thing. They just come out and they downgrade everything in the sector. It's all bad. It's all terrible. We got to downgrade it all. And, like a trader, selling at the bottom, we see that happen with analysts all the time. We haven't seen it in the energy space here just yet. But this morning, Bank of America, Merrill came out. They downgraded ConocoPhillips, $72 price target on them, but a downgrade nonetheless. We saw them come out. They downgraded EOG Resources, another oil name. This had been an outperformer, but of late has really gotten hammered. They came out, downgraded CRC, which is another kind of energy name there, a little higher risk type of energy name. But HK, they came out, downgraded. Range Resources, they came out and downgraded. So you kind of see the theme here. With it, they have come out and just really, really taken this sector and just, downgraded whatever they have, in the sector. Southwest Energy is another one that they downgraded here this morning. So, it's one of the types of things that I want to see to basically say, hey, you know what, there's a bottom in the group, there's a bottom in the sector. Would love to see another analyst, come out and do that here as well. But, we have the positive energy, positive oil. Oil's going to be hitting a multi-week high here, or is hitting a multi-week high, right? So this massive bear market in energy that we see, we are now seeing a multi-week high come in a rather bullish fashion. So that will likely give the energy sector some support here this morning, and help it push onto some further rally. But we're also going to see some real strength in some of the material sector out there this morning. And, this coming on just hopes of trade war talks. BHP this morning set to gap up about $1.50. Vale here this morning set to gap up pretty big, basically erase all of yesterday's losses. So, a lot of these continuing to play that ping pong game, back and forth based on the news, based on, what is happening, but materially not really going anywhere. And that's kind of what the market has been here for about the last week and a half, not really getting anywhere. Yes, trading within a 50, 60 point range, but not really kind of, going anywhere. And we talked about this being one of the risks that's out there, and the market goes through these types of periods. It's not unusual, to have these, and right now it is absolutely in the midst of one, and I would like to see option values compressed during this. We haven't seen it happen to a great degree, though I do suspect we'll see it continue a little bit more today. Very very interested to see how pricing, compares to, pricing on Wednesday when we saw, a little bit of that market rally here. But some of these just basically, bullish engulfings and then, bearish breakdowns and some of these short-term type of signals here, even though they have, catalyst, news catalyst, economic catalyst, earnings catalyst, we're not seeing them hold in the short term, get followed through in the ultra short term, and that could continue here until we see a little more, resolution in terms of, the trade war, in terms of what the market, what can be fully priced in and fully expected here from that. Okay, now we did get the jobs report come out, and if we come in here, I'll show you what that number looks like, because this is the number that the Fed's always talking about. They don't really base a decision off of this number, but they use it in their arguments, right? That's kind of historically how the Fed has used employment. The TV channels, they run with this number, because it's a very easy one for the masses to digest and understand, and hits a lot of people, home, right? It hits home with a lot of people. So let's see here if it's going to come up here for me. There we go. Let's see, view full calendar. Let's go. Perhaps. There we go. All right. But if we come on down here to U.S. employment situation, this side is being quite slow. You do see here we do have more data today. We have the oil inventory report today. We'll have the PMI services number here in the U.S. That will be released here today. So a little more economic data coming, after the market opens here today. And if this isn't going to come up, then I'm not going to wait too much longer here for it. But bottom line, it was an absolute blowout number. They added, there was a 312,000 jobs, added. So pretty much in line with the ADP in terms of, jobs added, and something that some will point to and say, hey, you know what, there's no recession, see, here in the job market. And there's some validity there, but there's also some concern there that, we'll get a Fed that stays fairly aggressive with interest rate hikes, based on the jobs report. But overall, I think it's one of those things that is going to fly in the face of those that argue that we're headed for a recession. But in and of itself, I don't think it's, by itself a big enough piece of data to really, do anything but make a little bit of an argument. There are plenty of other pieces of data that can make a little bit of a different argument there with it. But it was a fantastic number, right? Don't get me wrong. It was a fantastic number there. And, we continue to see this ping pong. And, let's face it, China resolution, this market is 20 to 30% cheap. No China resolution, this market's about 10 to 15% expensive. That's a huge range. That is based on one thing, a 40% type of range. That is absolutely massive, one of the biggest that we've seen historically, and something that will ultimately resolve. But the directionality of it and everything in the hows of it all, we may still be in for a little bit more ping pong here overall. Thanks for hopping on. Have yourselves a great one. Throughout the day today, I'll be jumping on talking about a few things. One of the things that we'll go and look at is some of the big money how it's positioned, how it has been flowing, what it has been doing. We'll go and talk about that a little bit later today. Hopefully next time I'm on here this morning, it's on to make a trade, and we'll see how that pans out with how the market opens this morning. But that's my hope, that's my expectation, and we'll talk to you then. Take care.